All right, so another trading day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. While we gauge startup funding in Africa and see where VCs might be looking at in the future. And Danish liner giant Maersk has lowered its global container market forecast for this year due to increased macroeconomic and geopolitical uncertainty. And President Donald Trump and markets react to the latest rate decision by the U.S. Fed, and President Trump has strong words. It's great to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with most of the markets that we track now, starting with oil prices. They rose about 1% today, supported by hopes of a breakthrough in looming trade talks between the United States and China, the world's two largest oil consumers. The market is almost, stabilized, according to analysts, above $61, which, along with, some optimism around the tariff situation with the icebreaker talks due between the U.S. and China. So we see there a 1.52% jump for Brent crude, $62.05 a barrel. And we see WTI crude not left out of the party, up a bigger 1.77%. Let's get a check on metals now. We see gold prices still dropping, after dropping about 1% on Wednesday, pressured by a firmer dollar and U.S.-China trade talks optimism, while the Federal Reserve, they held rates yesterday. All of that, causing a sell-off with metals there, 0.70%. Spot gold down. They're still holding on to that $3,000 level. U.S. gold futures also down a bigger 1.40%. Spot silver down 0.40%. And just platinum holding on quite strong there. We see other fiat currencies there got weaker against the dollar because a strong dollar makes the gold more expensive for currency holders. So we see the Fed interest rates being held steady yesterday. That's making most of the investors feel like the uncertainty might be getting more certain, at this point. So we're seeing a drop there across board with most of the metals that we track. Just platinum holding on by just 0.10%. All right, to other matters now. The Cocoa Association of Nigeria is working towards repositioning the association towards ensuring quality and competitiveness in the international market. The national president of the association, Muftau Bolariwa, made this disclosure at the National Cocoa Stakeholders Workshop in Akure, at the Ondo State capital. Take a listen.
The International Culture and Event Center in Akure, the Ondo State capital, is the venue for the National Cocoa Stakeholders Workshop and Excellency Award. The theme, deforestation-free cocoa production and improved trade practices through adoption of sustainable national traceability system, means that essentials of production and trade will be covered.
The association has faced funding constraints that have made it difficult to meet certain obligations. In light of this, the National Council has approved the following strategy measures to strengthen our financial base. The 300 naira per ton levy on all cocoa loaders from farm gates throughout Nigeria. We revise the membership structure with registration now as from 500,000 and annual subscription of 1 million, depending on the membership category.
The governor of the state, Lucky Aiyedatiwa, is working closely with the association after assessing the economic benefit of cocoa to the state. He shares his support.
Provision of improved seedlings and fertilizers free of charge to farmers to enhance yield and quality. And this we will continue to do from time to time. Comprehensive training and capacity building programs for select farmers to adopt best practice.
At the end of the two-day workshop, it's expected that more ideas, synergies, and policies would have been formed towards improving the quality and quantity of cocoa production in the country.
And the 16th Lagos Architects Forum concluded in Lagos recently, bringing together industry leaders to explore the future of architecture in Nigeria's bustling megacity. With the theme, Digital Transformation in Architecture, Building Smarter Cities. This year's event highlights the critical role of technology in reshaping Lagos as urban landscape. The chairman of the Nigerian Institute of Architects Lagos State chapter emphasized the forum's significance as a hub for innovation, collaboration, and sustainable solutions in a rapidly evolving city. As digital tools like AI, virtual reality, and big data redefine design and construction, the forum aims to drive smarter, more resilient urban development for Lagos and beyond.
Digital transformation means we're trying to look at the old ways of doing things, but finding better, smarter ways to do these things. What we started to do was to create advocacy for transforming Lagos. I mean, there's a lot of things that Lagos has already started doing. The smart rail, smart traffic lights, but there's so much more we can do to transforming Lagos into a smarter city. At the end of this, we are hoping that we can help or encourage the government to do bigger things. Not just the government, but you see, the thing about digital transformation is not about the government alone. It's about everybody. It's about the private sector. It's about all of us, both as individuals and professionals.
And the federal government says the target to reverse the import ratio in the health sector from the current 70% to 30% by 2030. That's coming along. And achieving this is the core responsibility of the Presidential Initiative on Unlocking Healthcare Value. That's PVAC. The National Coordinator, Dr. Abdul Mukhtar, was a guest on Business Morning, says there are resources and timelines to ensure that this is achieved. Take a listen.
In 1 year, we'll have a full-fledged manufacturing academy for local manufacturing in Nigeria. In the next 2 to 3 months, we're going to establish a virtual training platform. We've already developed the curriculum. We've already attracted the knowledge and the things that we need. This will be rolled online across Nigeria. The second phase, which is from the 3rd month to maybe another 3 months, is to establish what we call training pods, where we'll have simulation facilities where you actually have machines and technology where people can actually go and train. And then the last phase is actually to establish physical structures in conjunction with existing universities. Medical knowledge changes so fast, and people go to school to study medicine, to study pharmacy for 4 or 5 years, and related sciences. At the end of the day, by the time they finish, the technology and the knowledge has evolved. So what we're trying to do, this is going to be like a finishing school, where very specific targeted training will be issued. And the industry is very excited about this because you know what their needs are. We'll train the industry, but we'll also support the regulators like NAFDAC, like the Pharmaceutical Council of Nigeria in doing that. So that is one. And again, I talk about ecosystem. There is also the issues around policies. As you know, His Excellency President Bola Ahmed Tinubu signed an executive order last year, which is actually being implemented as we speak, to provide fiscal incentives, including zero duty, zero VAT for importing equipment and raw materials for local production of healthcare products. This is very important. The second provision in the executive order is the provision to shape the market, through the establishment of pool procurement mechanisms, framework contracts, and volume guarantees. So that's on the one hand. And the second issue that you talk about, which is the financing. So again, some of these manufacturers need all sort of finances. So what we've been doing is to mobilize resources that have multiple instruments that will serve the needs across the industry. Some companies are big, some are small, some need debt, some need equity, some need guarantees, some just need technical assistance. So just talking to financial institutions, the development finance institutions, but also other related institutions, we are mobilizing a pool of this money. So the 1 billion from Exim Bank and the 1 billion euro from the European Investment Bank, for example, these are pools of money that are available, that are ready for people to tap into, provided you have a good, feasible, bankable business plan. This money is available.
All right, now let's get a check on what's playing out with most markets that we track. They were seeing, some positive signs in most of the global markets. Let's see if that's still carrying on. We have Ini John McQuarrie with the details right now. Good to have you, Ini.
Good to be on the other side.
Yeah, we've switched roles again. So it's quite incredible what's happening in the U.S. I did say earlier that, President Donald Trump is not happy with the decision yesterday.
Yes.
And he had strong words today.
Yeah. What was that he said? That
I can't say it.
Okay.
But he
all
called.
I can say it. But if you want to know, just go to Truth. I think he said it.
On Truth Social.
Truth Social.
Yeah.
That's where he said
He's not happy with the U.S.
It's not a word you would expect the president to say to someone working with him or anyone at all at that. But President Trump, he says it as he feels it.
Right.
Doesn't compromise. It doesn't butter or sugar coat it. So it is what it is. President Trump is who he is, and
Right.
the world just has to take it. But I do hope that this reaction, we do know that President Trump hasn't been happy with the hold stance of the Fed. This is the third time they're doing it. But economists are saying this is, in the absence of a hike, this is the only way to go. You cannot start cutting interest rates when you see inflationary pressures all around you, the threat of recession, not just for the United States, but all over, because whatever happens there also affects other countries. We see all of this coming closer and closer. We don't even know if there's going to be a deal between the U.S. and China.
Exactly. We just
this weekend.
keep hearing about announcements.
For all you can say, the president can just tell the secretary, walk out of there, and it can happen.
Right.
You know what I'm saying?
No deal.
Yeah,
the
no
markets
deal.
plummet after that.
Exactly, and everything goes down, and even the dollar feels it. We saw the positive movement, this morning when you were showing us the index.
Right.
We saw 0.4 plus. But that can be eroded in with just one sentence from President Trump. So,
I'm keeping my eyes on Truth Social at this point, because the president can say anything and you get it fast.
Yes, you get it just first hand right there. But the after effect just goes on, and Mr. Powell and those in the meeting in the Fed, they're economists.
Exactly.
And they have to make decisions based on
these
data.
These are votes, It's, by all the members there. So, but he puts it on Powell.
It's not Nigeria, where the president's sentiments will, overrule every other sentiment.
Right.
And reasoning,
it's quite a different ballgame.
I didn't really say that. Really.
Yeah, you didn't say that. You didn't hear that from me.
All right, let's do the markets now. We see more results pouring in Nigeria for Airtel. That's where we'll be starting from. So the tariffs has helped Airtel, at least from their results. This is the March for the period ended March 25. If we could have the Airtel results, March 31, 2025, they say that their customer base went up 8.7% to 166.1 million. Data usage per customer. Now, we don't know if that's because there's an increase in the price, but data usage per customer went up 30.4 to about 7 gig for a customer. Revenue growth up 23.2 in constant currency. This is Airtel Africa. So, apart from Nigeria, the group numbers are also there, and 17.8% in reported currency as currency headwinds eased. You would know, of course, that there's been a bit more stability when it comes to the value of the naira and the rate between the naira and the dollar. So that's what's captured there. Mobile services revenue went up 19.6% in constant currency. And we have other parts, a bit that was down in reported currency to 2,304. Profit after tax also improved from a loss. We talked with MTN earlier today on Business Morning, and we see they're also reporting profit first time in 2 years because of these headwinds, especially connected to FX. And so now they seem more optimistic of better results, better dividend for customers and investors. But of course, Nigerians are asking, when do we see that improvement in the network. That was the conversation we had this morning. You can go to our YouTube channel and you will get it there if you missed that. So looking at the bigger markets now for Nigeria, we see it's still positive at intraday at 0.01%. So yesterday, a bit of confusion. Towards the end of the market or trading yesterday, we saw we were on 109, and then, just at the dying minute, there was a drop. But the good thing is that intraday today, we finally have that 109,000 level for the NGX, 109,007.31. In South Africa, they've also recovered, even though they haven't gone back to the 92,000 level. They're at 91,523.38 intraday, just slightly up 0.03%. Other markets that we track on the continent is Egypt. Egypt is in the red, 0.11% at 31,800. And then for Nairobi, close positive 0.16%. And we see they've added on that 125 level. They've been carrying on for a bit. They're now at 126. And talk about the Nairobi Stock Exchange, we do have joining us to discuss what's going on in the market there, the head of research at KCB Group, Jesse Ludenyo. Mr. Ludenyo, good afternoon and welcome to the program.
Good afternoon, Edie. Ini, how are you?
Great. So what's going on? I think a couple of days ago, there was a big news that came from that's what's happening in the market, some pullouts. What's really going on with the market there in Kenya?
Thank you, Ini. It's quite a cornucopia of factors happening down here. We have seen a rather sluggish Q1 in the Nairobi All-Share Index. Remember, we came off from a year, or 2024 year, where there was a massive improvement of about 34%. But as of Q1, we're seeing a sluggish gain of about 5%. So that has been because of several factors. One has been the fact that banks have really boosted up the performance in Q1 based on their earnings results. And also, this has also been coupled by a rally in the insurance sector, particular stocks in the insurance space. So that has cushioned the market. But on an overall basis, there has been net outflows from foreign investors, and so that means that on overall performance, the index has largely slugged. And also the market performance has been rather flat because of that foreign outflow. So a lot of this market is not currently being driven by a lot of local investment.
So what do you think is stopping the locals from participating more in the market? Because in Nigeria, yes, of course, we do have that change in proportion. Sometimes it's the foreign investors, but now I believe we have more of the domestic investors in the market. What are some of those discouraging factors for domestic investors in Kenya?
Well, in Kenya and generally in East Africa, we always look at it as a market that has to a large extent, very patient capital. So the capital here is really driven by returns, immediate returns, which may not necessarily be available in the market all through. Number two is that the market here is also characterized by low information penetration towards the local investment. And the third factor has been that because the government has been very active in the fixed income space, that has led to a rise in rates in the fixed income space, and therefore investors have always preferred to allocate towards the fixed income space vis-a-vis the equities market. Now, what is happening in Q1 has been that as rates have been declining and the central bank has been keen on cutting rates on the fixed income space, there has been reallocation of that capital towards the equities market by the local investors. And so that is what has at least cushioned the markets. But by and large, it has largely been held by the foreign investor participation.
All right, so if you would say something about getting more investors there, you talked about dissemination of information, and I mean, investors are not so patient and all of that, but I guess it's more about information. How would you suggest, for instance, information is shared more, to get more participants, maybe about how the market runs, some of the benefits, that accrue to investors in the stock market?
Actually, that is what has been our focus, even as participants in the market, because in quarter one, what is most notable about the performance of the indices here is a lot of what we call the blue chip stocks, or the most famous stocks in the bourse, have been riding on that fame among the local investors. But what we can see in quarter one is that some of the what we call penny stocks, or some of the very cheap stocks in the bourse, have actually been the ones that have outperformed the rest of the listed stocks. So when you talk about companies like Crown Paints Kenya, that has risen about 18.5%, Liberty Group in the insurance space that has risen about 13.59%, Kakuzi about 10%. These are stocks that you would largely find relatively cheap compared to, or relatively unpopular compared to, your normal Safaricom, your normal KCB. And these are the ones that have risen the performance. So we're trying to increase that sensitization on alternative investment ideas around the bourse, because it's clear now that even the penny stocks can largely create wealth for investors.
So what are the most lucrative sectors in your stock market?
So currently we're still riding on banks. Banking sector has been the most resilient and active sector of the bourse. We are also seeing a bit of resilience from agriculture. Now, agriculture is a bit cyclical. One, because of the changing weather patterns. Two, because of the evaluation metrics. Most of them have what we call biological assets, which are not very easy to value. So that the agricultural sector would come in second, and then of course the manufacturing sector, where we would have companies like East African breweries that have also been resilient over time. And then of course the most popular has been Safaricom, which has been facing a bit of headwinds based on its diversification strategy and moving forward, and therefore for the last quarter of the year, it has been rather as stagnant and flat. So investors haven't really generated much returns from it, and that is in the technology sector.
All right, thank you so much for your time, Jesse Ludenyo. We do wish to see, bigger numbers. We see you at the 125, 126 level. Well, your counterparts on the continent are doing in thousands, and we hope that we'll see the NSE also get into that group really soon. But thank you so much, Head of Research at KCB Group.
Thank you, Amy. Thank you.
All right, let's look at other markets now. We head to the Middle East and see stocks mixed at intraday. Abu Dhabi is in the green, 0.17%, 9,626.94. For Dubai, it's on the flip side, almost 0.5% in the red at 5,315.77. In Saudi, it's also red, and Qatar, we see, is green at intraday. Moving to the United States, where President Trump, the action comes from, to hit the other parts of the world. Stocks were higher on Thursday, and President Trump announced a trade deal between the US and the UK. That has been struck. I haven't gotten the details yet, but I know that will be unveiled really soon. The agreement with the UK is a full and comprehensive one that will cement the relationship between the US and the UK. Interesting conversation, I can see, building up on that. And also, investors have been looking for signs of progress on global trade. Obviously, the weekend is on the mind of a lot of investors. That's going to be the US and China. And we hope and hold our breath that something good will come out of that. So we see the Dow in the green, 0.17% at 41,558. The S&P also green, very green in fact, at more than 1%. The Nasdaq is also almost 1.5% in the green. So some good news coming from the trade side. I do hope, or maybe when investors survey and see this reaction of President Trump to the reserves, the Federal Reserve's decision, and see which way could it go. Are we going to talk of a sack of Mr. Powell again? I think we're not hearing that here. So the market is quite stable and looking attractive for the futures in the United States. Let's go to Asia now, where stocks edge higher after the holding of rates by the U.S. Fed. So we start from Nikkei, green, Kospi, green, the Hang Seng Index, green, Shanghai, green, just India, that's the Nifty 50, that's in the red at this time. At the close of trade, South Korea, Kospi rose, Nasdaq advanced. Australia also went up 0.16%, and the Federal Open Market Committee held its benchmark overnight borrowing rate in range between 4.25 and 4.5. Investors are eager, waiting for updates on the upcoming U.S. and China trade talks. That is a major one for a lot of investors around the world at this time. So I wonder if the crypto markets, Ladi, is also looking at that. So I mean, sometimes we forget the crypto also reacts to, all of this.
Big reaction.
But I know the community is also watching, all eyes on Switzerland for this weekend.
Right.
I don't know if we're going to have to. You say you want to tune to Truth Social? That's where
we should keep an eye on Truth Social, because that's where President Trump, speaks more on. But, definitely we're seeing Bitcoin, getting close to that 100,000 levels. Not broken it yet, last time I checked. But I don't know. I just feel like the UK-US talks we're expecting today, I don't know. I feel like we might see red tomorrow, Friday.
Why should we see red? It sounds good. It's supposed to be good news.
Yeah, but who knows what's going to happen? Have
a little bit of faith in President Trump.
Just a little, right?
Just a little,
okay.
because we saw a survey of his handling of the economy by Americans, and it was really bad.
Yeah.
So maybe that will get to him. And also the reality of it, that the United States cannot stand on its own. Every country leans on another. It's a global village we're living in.
Even though President Trump says we don't need their products, they need our products.
You're talking about China or you're talking about the world?
China.
If you don't need their products, you're going to need their labor.
Exactly. But President Trump doesn't.
And then you even need Ukraine's mineral resources.
We all need each other. At the end
so, I mean, that's the reality of it. Well, let's hope President Trump agrees with us.
We'll all get that reality check.
Yeah.
At some point. Thank you so much, Irene, for giving us the details of what's playing out with those markets. Well, let's take it on to Europe now. See, one of the economic engines of Europe, that's Germany, is currently in its third year of a recession. Now, with a new government in place, putting the economy back on track is a major priority. Now, a fresh set of numbers have been shown now where things stand right now. We'll get that detail there from Lars Halter. Great to have you, Lars.
Hi, Ladi. Good to be with you.
Nice. So what can you tell us about the latest numbers there about the German economy?
Well, Ladi, they're good. They're, in fact, a lot better than had been expected, and that's something we haven't heard in a while here. New orders for the month of March up 3.6%, and that's after a really weak start to the year. Now, analysts had been expecting a plus of only 1.3%, and for this final number to come in 3 times as strong, that is really something we're not seeing every day here. So, like I said, we're coming off a rather weak period with orders down 5.5% in January and stagnating in February. So looking at the entire first quarter, we're still down quite a bit. Anyway, one might see these latest numbers as a sign that things are getting better, but we should be really careful about that. Sources are telling us that many orders might have been placed to be booked before these U.S. tariffs would be levied that you also just talked about. Now, so, that would mean that companies just moved up orders that they would have likely placed later in the year. And that in turn means, of course, that numbers are strong now, but numbers for upcoming months, then again, again might be a bit weaker again. Except, of course, if the new government here in Berlin is as fast as they promised when it comes to support growth for the economy.
And definitely, I'm guessing, Germany will also be, trying to get some kind of trade deal. Are you hearing anything about that?
Not yet. I do know that our new Chancellor, Friedrich Merz, is having initial talks, or at least a phone call with U.S. President Trump today. No details at this point are clear. I mean, obviously, we know, and you just talked about it here, we have some details apparently coming up on a likely trade deal between the United States and the UK. China is obviously a big priority for the U.S. I don't know when they're getting around to dealing with Germany. By the way, then that's not going to be a trade deal with Germany anyway, because it would go through Brussels, because we're dealing, when it comes to trade, of course, on the level of the European Union. And then we have to see what realities we can get through here after cutting through all the talk with Trump. But I do know, of course, that the government here is planning other things, of course, to get growth back into the economy. They're talking tax cut. Of course, corporate taxes in Germany are just about the highest in all of Europe. But it's not going to be easy either, even for the new government, because tax cuts, of course, cost money. And some people would argue that taxes should be cut not necessarily at the top for companies, but that they should be cut at the bottom of the economic ladder. However, that would also be a good idea, because that would very likely spur growth in terms of consumer spending.
And, listening to, some of the plans, by the new government, do you think, the markets are feeling confident, with what they've heard so far?
From what I can tell, yes, markets are pretty happy. We've seen a strong rally for the last couple of months, and then included, Ladi, the entire time since we had the election that Friedrich Merz won. Now, of course, as we discussed earlier this week, we had the Chancellor stumbling a little bit here out of the gates when he did not get elected by the parliament on first try, but then on the second ballot. That's not going to play a role in the long run, especially not when it comes to the economy, to trade, to all these global issues that are very important now to markets. Now, what the markets are dealing with today is not so much the government here, especially since we're having a government holiday to commemorate the 80th anniversary of the end of World War II. No, we are actually, in terms of investors, looking towards the U.S., of course, after we had the Fed decision yesterday. That was, of course, not a big deal, because it was as expected with no change. We are waiting on those details that we might be hearing on a trade deal between the U.S. and the U.K. And we're also looking at some numbers coming out of German companies. Very strong results out from defense contractor Rheinmetall, also Siemens Energy up after very strong results. And that gets us back to trade. Chipmaker Infineon has cut its outlook because they are worried about trade. That's, of course, where everything comes back together. All in all, the DAX is up about 1%, and that's where we stand right now.
And definitely, I know Rheinmetall is definitely riding on all of that defense spending. Do you think that's still going to drive, sentiment with that stock going forward?
Yes, probably. Then again, it's not going to change much, because Rheinmetall, Ladi, has been a very strong performer for the last couple of years for two reasons. Of course, we had defense spending rise just with looks to Ukraine and the Russian war there. But also, of course, once U.S. President Trump got elected, and the EU and Germany had to learn that we can no longer depend on the U.S. the way we used to, and that we have to do more for our own defense. That jacked up defense spending, and everybody understands that defense spending will be a lot higher in Germany, in all of Europe, than it has really been for decades, and that is going to be a positive for Rheinmetall and some of the other defense contractors for many years to come, probably.
All right, we'll definitely be tracking all of that progress. Thank you so much, Lars Horta, for giving us details in Europe.
Thank you, Ladi. Good speaking with you.
All right, to other stories now. See, Danish shipping giant Maersk has revised its global container market forecast for the year, citing growing macroeconomic and geopolitical uncertainties. The company now anticipates market growth in 2025 could range from a 1% decline to a 4% increase, a significant shift from the previous projection of a 4% rise made earlier this year. Led by CEO Vincent Clerc, Maersk noted that the outlook for global container demand for the rest of the year remains highly unpredictable, influenced by an evolving trade policy landscape and heightened recession risk in the United States. Additionally, Maersk expects market growth in the second quarter, provided shippers take advantage of a 90-day suspension of reciprocal tariffs by front-loading shipments and building up inventories. And South Africa's President Cyril Ramaphosa says some of the early reforms under Operation Vulindlela are already starting to pave the way for economic growth as South Africa continues to grapple with economic stagnation. Launched in 2020 during the height of the COVID-19 pandemic, the initiative was designed to tackle key bottlenecks in the energy, logistics, and telecommunications sectors. President Ramaphosa officially launched Phase 2 of Operation Vulindlela at the Capital Pretoria Union buildings, reaffirming government's commitment to fast-tracking structural reforms that drive growth and job creation. Take a listen.
Over the past 4 years, we have seen the green shoots of economic reform sprouting out. Through far-reaching reforms in the electricity sector, we have substantially reduced the severity as well as the frequency, and many of us will testify to this frequency of load shedding, relieving a constraint on growth which had strangled our economy for years. And the electricity challenge that we faced was of a special type, of an extraordinary type, that made South Africans very angry, frustrated, and dejected in many, many ways, because the resource they had become accustomed to, continuous electricity, had been taken away from them.
Well, let's get a check on all the stories now coming out of East Africa. We see Kenya's trade deficit that narrowed in 2024, driven primarily by a surge in re-exports of kerosene-type jet fuel to neighboring countries, contributing significantly to the stabilization of the shilling. The local currency remained relatively strong against major global currencies, averaging 129.45 units per US dollar for the year, after plummeting to a record low of 160.18 units against the greenback on January 12, 2024. The Kenya Economic Survey, released earlier, revealed that total exports increased to 1.12 trillion shillings, up from 1.007 trillion shillings in the previous year. Re-exports saw a substantial 77% rise to 180.2 billion shillings, driven largely by the growth in kerosene-type jet fuel re-exports. All right, let's head to the commodities market now. We see detergent, an indispensable product for both households and businesses. We've seen a notable price increase in recent months. As of the latest data, the average price for a 900-gram pack of detergent has risen by about 7%, from 1,750 naira to 1,850 naira. Let's bring in Miriam Ode now to tell us more. Great to have you, Miriam.
Good afternoon, Ladi. Thank you for having me.
Yeah, thanks. So, with this price rise, definitely we keep, seeing most of these prices stay elevated. But I hope you're not telling me I won't be able to wash my shirt soon with this increase. What's driving that?
Yes, Ladi, like many other commodities, we're seeing an increase in the price of detergents. And why we're seeing this increase is mainly because of higher inflationary pressures in the country. And this is reflected in the increase in the price of domestic palm oil. And why I'm bringing up palm oil is because palm oil is actually a key ingredient used in the production of detergents. Surprising, I know. But yes, it is used in the production of detergents. And so an increase in the price of palm oil is going to reflect in the domestic price of detergents. There's also the fact that Nigeria is a major net importer of palm oil, meaning that it is both palm oil and detergents are susceptible or are affected by the exchange rate volatility or exchange rate movement. And we have seen that year to date, the exchange rate at the official window has actually depreciated by 4.4%. So this is translated into domestic price of both the detergents and palm oil. But like you said, we cannot expect consumers to stop washing their clothes or stop cleaning up their houses because of an increase in the price of detergent. So what we are going to see is that this increase or higher detergent prices is going to result in a shift of consumer demand towards cheaper brands of detergents. And also we're going to see a shift towards smaller packaging sizes. That's demand will shift towards smaller packaging sizes. But what we tracked was the 900 grams. But remember, there are still other packs like the 180 gram. So we'll see a shift towards that. And let's not forget that there's a growing trend of consumers actually producing their own liquid soaps at home. So higher detergent prices is going to fuel this growing trend and increase its popularity among consumers. So what we're going to see due to the high detergent price is one, a shift towards cheaper brands, two, shifts of demand towards smaller packages of detergents, and also an increase in the production of local detergents or liquid soap.
Right. Yeah, I see most of those local liquid soaps there, being produced by, most of our entrepreneurs here. But do you think, some of them are going as far as, branding, some of these products? Are you seeing that trend at all?
Most of the consumers that are actually doing this household liquid soaps are not doing it in order to make business or to make money from it. It's not for commercialization purposes, but mostly just to make ends meet and to do what they can to mitigate the impact of rising inflationary pressures on their pockets. So I doubt that we will see going forward a more branding of these local soaps. But then, if you go to any supermarket, you will see liquid soaps already. So those ones are already there. But I doubt that more consumers would want to commercialize these local soaps. Like I mentioned before, they are mostly just doing it to as a means to ease pressures on themselves.
Right, and I hope they're, putting in good ingredients to get, better quality. But what are you seeing, for palm oil prices, going forward, and the impact for most of these products?
Yes, Ladi, surprisingly, actually, this is the peak harvest season for palm oil, meaning that we're supposed to be seeing a decline in price of palm oil. And interestingly, even the global price of palm oil has actually fallen by 14%. So we're supposed to be seeing a decline in domestic price of palm oil, but instead we're seeing a 9% increase to 12,000 naira for the 5 liter. And this is because of the strong demand for palm oil in the country. And going forward, do we still expect palm oil prices to remain elevated? Yes, and this is because of the fact that despite the strong demand for the products, there's still limited supply domestically. And this is because of the fact that 80% of the farmers in the palm industry are actually small-scale farmers. So even though demand is attractive and suppliers or producers want to increase their supply to meet up with demand, to meet up with the demand, they have limited resources to be able to increase output levels. So this gap between demand and supply is going to keep palm oil prices elevated in the near term. And like we know already, palm oil is used to produce detergents. So if palm oil prices remain high, then detergent prices in the country are likely to remain elevated too.
Tracking those prices. Thank you so much, Miriam Ode, for bringing us up to speed.
Thank you so much, Nandi, for having me.
All right, let's get a check on what's playing out with the crypto market now. I did see green on the screen earlier with Bitcoin trying to break that resistance of about $100,000, but we're seeing 99,500. Just about $500 more, and you're back there, 2.53% up. And we've seen Ethereum not left out, also trying to get back to that $2,000 psychological level, 7.54%. Solana's not left out. Cardano's up about 6.3%. So we're seeing most of the altcoins fully in the green with this big jump there we're seeing with Bitcoin, and with Bitcoin dominance sitting at 62.72%. Let's get a check on most of the headlines in the crypto space. We see Coinbase they've unveiled a Bitcoin yield fund. They recently launched a feature that could change how investors view Bitcoin. The Bitcoin yield is now real for institutions outside the U.S. The new fund, launched by Coinbase Asset Management, allows non-U.S. institutional investors to earn between 4 and 8% annual returns, paying them directly in Bitcoin. And we also see Bitcoin dominance there. I mentioned before, 65%. Yeah, it's normally ranged between 50% to 55%, but we're seeing a big surge there, showing that Bitcoin has more dominance compared to most of the altcoins in the market, and that's growing. We know Ethereum has the second largest dominance there, and so we're seeing that shrink with most of the altcoins, even though we're seeing the prices rise at this point. We did get a forecast that this could rise to as much as 90%, at some point by some influential crypto analysts there. But we'll see if that plays out. To other matters now, see Nigeria recently took a significant step by classifying Bitcoin as a security under its new regulatory framework, marking a bold shift in the country's stance on cryptocurrency as a global landscape of crypto regulation. That continues to evolve. Many are looking at how other countries are addressing this issue. Joining us now is Arushi Goel. She's the head of policy, Middle East, North Africa, Chainalysis. Great to have you on the show.
Thank you, Ladi. Lovely to be back again.
Fantastic. So we see we've had that argument, in other countries. The previous leadership, the Securities and Exchange Commission in the U.S. did say, most of these cryptocurrencies were securities. There was that argument back and forth. But here in Nigeria, Bitcoin has been labeled a security under the new law. But talk to me about how other countries are handling this tag, for Bitcoin and most of these cryptocurrencies.
Yeah, that's always an interesting discussion, right? I mean, in Nigeria specifically, it's obviously a positive and a significant shift, especially given that a few years back, the regulatory environment was quite restrictive. In terms of what's happening in other jurisdictions, I mean, to be fair, classification is one of those areas where we've seen a lot of global fragmentation. In the US, for instance, which is now starting to deliberate market structure after several years of regulation by enforcement, we're obviously hoping for some clarity to come forth in the coming months. Europe, on the other hand, they kind of went ahead and enacted a crypto-specific framework, widely known as MiCA, or Markets in Crypto Assets, which essentially categorize crypto under three broad buckets. You could be asset referenced, that is, backed by a basket of assets. You could be e-money backed by a fiat currency, or you could be a part of this separate bucket, which is all other crypto tokens. So all your Bitcoins and Ethereums would be a part of it. UAE, for example, at least one of the regulators where I'm based right now has actually taken an activity-first approach. So they've kind of chosen to focus on the functions that is provided by the service provider rather than a token classification. So anyways, I think the idea is that jurisdictions have either built out very specific crypto-related rules and regulations, or they have kind of tried to align with the existing framework. So they've all kind of approached this differently at very different paces. So what has really resulted is this a bit of an uneven landscape where every country has a different approach in terms of how these assets can be used, who's the primary regulator, what kind of obligations apply. That said, I do think some kind of recalibration will happen given the pace at which the industry moves.
So, now that we have that classification in Nigeria with, Bitcoin being a security, do you think that will open the floodgates for, TradFi, that's traditional finance, to, jump in, on Bitcoin? Because we keep hearing about, MicroStrategy, buying all of that Bitcoin.
Yeah, well, I mean, that's, like I said, it's obviously good news. And Nigeria has kind of consistently ranked in top 5 of the Chainalysis Crypto Adoption Index over the years. So regulatory clarity is a bit overdue and welcome. And, just taking a step back, it's not like there was a regulatory vacuum to begin with. I mean, we did in Nigeria have the 2022 SEC rules, which kind of created a sandbox light regime. And even the central bank had kind of gone back and issued a guidance on how banks could interact with the crypto firms and manage their risks. So, what we're really seeing now is the regulatory perimeter being clarified and crypto now being formally slotted into the capital markets regime. Now, for the sector, this raises a bit of both opportunity and obligation, right? Because your compliance expectations will go up. You would likely need to have more disclosures, better, robust internal controls, probably some more strengthened capital requirements. And there's always a possibility that it may concentrate the field around more mature market players, but obviously bringing a degree of legitimacy. For traditional financial institutions like the banks, this is once again a very meaningful development, right? But banks have, they've obviously been kind of making a shift from being crypto averse to trying to understand what the risks are when it comes to crypto. And now having that legislative clarity and now being able to, let's say, work with an SEC licensed entity would obviously bring a level of comfort and confidence, right? In terms of whether banks can hold crypto on their balance sheets or can have models for crypto lending, I think there's still a bit of a way to go because we are dealing with a whole plethora of rules and regulations, both domestic and global.
Yeah, that seems it might take a long time before you see, African entities accumulating Bitcoin and adding that to their balance sheet. But one big worry that doesn't seem to go away is, the scams. Talk to me about what you're seeing, with, handling in regions like Nigeria and, some countries in Africa.
Yeah, I mean, crypto crime is, of course, evolving, and globally, I think what's been concerning is that we've seen almost every major criminal activity now has a crypto nexus, whether it's frauds or scams or sanctions evasions, right? So even though illicit crypto activity now comprises less than 1% of all crypto activity, it continues to be a bit of a real risk. And I mean, scams and frauds are obviously a major risk, particularly the most profound ones like the investment schemes or the so-called pig butchering scams that are exploiting the trust of the victims. Again, what's been interesting is how they have evolved, right? They've evolved to be more organized, a bit more professional in nature. We've kind of seen it emerge like crime as a service. We've seen bad actors, sell off-the-shelf money laundering tools, impersonation kits, and so on and so forth, which are openly being sold or rented through public or semi-public platforms. However, I would like to highlight that many of these networks continue to exhibit low crypto literacy, right? I mean, they are using crypto for speed and perceived anonymity, but they often lack the operational depth to hide their tracks. And that's where we've seen law enforcement very effectively leverage on-chain data analytics to trace through, to investigate, sometimes even to dismantle some of these criminal networks. So while the crime is rising, we do have, things like regulatory clarity that's happened in Nigeria now, as well as law enforcement capability development that's making us much better in terms of making sure we are not only reacting to that crime, but in a way also being able to prevent that crime in the first place.
Right, definitely. The regulators have a lot of work on their hands, navigating most of these scams that happen in the crypto industry and trying to protect most of these investors. Thank you so much. It was great having your perspective. That was Arushi Gors, is the head of policy, Middle East, North Africa at Chainalysis. Thank you for coming on today.
Thank you.
All right, that's the show today, and that's how most of the markets are looking. We're seeing a breather there, investors, having some kind of fun today in these markets with possibility of talks there getting positive with the UK and the US. We'll definitely bring you more details on what's playing out with these markets same time tomorrow. Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.